Our next guest says that consumers are taking their money to food retailers instead of general merchandisers as inflation continues. With us now, former Walmart U.S. CEO Bill Simon. Bill, thanks so much for being here. So explain that to us. It sounds kind of in line with what Steve was just talking about with regard to consumers focusing on some of those non-discretionary spending items, putting more discretionary to the wayside in light of just this continued inflation pressure that they're feeling in the stores.
Yeah, sure. No, it all makes sense in the behaviors that it's sort of what we're seeing. And some of the reports today really reaffirm that. I mean, Kohl's traffic was just devastated. Well, nobody's going to Kohl's to buy their general merchandise. They're already in Walmart. Walmart reported traffic up, and that's driven by their food business. Oh, and by the way, while I'm there, I'll pick up whatever general merchandise needs I have. And that's sort of what we're seeing, the consumers kind of focusing on the real heavy burden that they have in their food and rent costs, and then sort of managing everything else to kind of get through.
And I know a few weeks ago you said on Fast Money, you actually made headlines by saying that the affluent consumers are creating a bubble at Walmart, that we're seeing some of this, perhaps in a way, unprecedented trading down of affluent consumers spending more at Walmart in light of these inflation pressures that we've been talking about. Why do you expect that to dissipate and tailwinds disappear? You don't think that wealthy consumers will maybe find a new home in Walmart and continue these patterns?
Well, I'm sure that's what they hope for. But, the trends in retail over the last 10 years have been more local, more convenient, and more digital. And so, Walmart's made some strides in those areas. But as the cost pressure, price pressure abates, I would expect that those trends would continue, and that some of the people who traded down to Walmart will go back to local, small, and in digital purchases for their business. And so that tailwind that some of the food retailers have now will shift into a headwind as they anniversary and cycle past that, the tailwind. And then there's some good companies out there. Target's one of my favorite, who's really not gotten a lot of traction because they don't have the food business that Walmart has, for example. And their headwind's going to shift into a tailwind in the not too distant future.
Yeah, even in grocery, Bill. I mean, this piece in the Journal this week about private label taking 22 cents of every dollar was pretty fascinating, especially since we've asked retailers and packaged food companies if they're seeing any trade into private label, and they always say no. But I wonder what you think that says.
Well, you could go back to the 2008-9. Difficulties, and you could go back to the 90s and even in the 80s, and you'll see that shift every time. People are smart, they're cautious with their dollars, and they go to where they get the most value. But when things change and their financial situation improves, they go back to local and luxury and brands. And every time that happens, a little more sticks in the private label. They go, hey, this stuff's pretty good, I'll keep buying it. Manufacturers will respond and create better private label, and we see that, private brands, and we see that. But invariably, we're in a cycle. And, it's kind of, I mentioned before, I said it's like, the Fed's been trying for this soft landing, and what they're achieving is really no landing at all. And that explains how the consumer feels good, and the consumer kind of keep spending, because we're still flying. We're just not going anywhere. We're in a holding pattern while we sort of figure out how to get through this little thing. We're in the air, but we're not going anywhere.